All right, natural gas prices soaring this week, hitting levels not seen in about 4 years. You might have heard there's a storm coming across much of the country, freezing temperatures, snow and ice, expected impact. About 200 million people across the U.S. this weekend. Take heed, folks. It's the real deal, not some media hype. Let's talk about the energy side. Samanta Dart is Goldman Sachs' co-head of global commodities research and joins us now. Samantha, a lot to talk about. First, start in the United States. From a commodities perspective, one of your competitors putting out a note yesterday calling traders a multi-sigma positioning move error. In other words, how offsides, how short was the market on natural gas coming into a few days ago?
Yeah, when we look at net speculative length in the market, it had been in the 14th percentile as of last Friday. So
what does that mean? What does that mean?
That the positioning, the net length in the market was one of the lowest that we've seen in recent history. So when you have a trigger like a big storm that is going to lift demand and potentially we expect is going to disrupt supply as well because it freezes the wells, it freezes, we think, more than 10% of U.S. natural gas production.
Okay, I was going to ask you, because there's all these estimates, and I don't want to get into BCFs, billion cubic feet, because that's a lot of zeros, Steve, to your earlier point. About 10% you think of natural gas could be too frozen to use? I mean, the equipment.
Well, the gas itself, when you take it out of the ground, it's not just gas. It has some liquids in it. When temperatures fall too much, that thing just freezes up, and then you can't get it out of the well. So it doesn't last very long. We're talking about a few days of this disruption of over 10% of U.S. natural gas supply. But we use that for everything. We use that for heating. We use that for power generation. So you're going to need the gas the most during the days when it's not going to be coming out of the ground. And the result is that you can have really high prices on a cash base. Doesn't mean that prices next month need to be this high. But if you look at the day ahead, if you look at that high frequency price, it's going to skyrocket. It has already started to rise significantly.
We were talking about it at the beginning of the show, so like 2 hours ago. But the fact that there were a lot of folks positioned short on natural gas ahead of this run that we've seen this week. How does that unwind affect other aspects of the commodities market, if it does at all?
I think the main impact is that we've seen the front month contract for natural gas rally over 40% week on week. So does that say that February is going to be that cold? So that's for February delivery of the gas. Is February going to have the same type of event? We don't have any reason right now to think so. So it exacerbates the rally. It just makes everything more expensive for a period of time. But we think that's a little bit overdone. Of course, weather forecasts can change, so volatility can stay high. But if you look at the prompt contract for U.S. natural gas right now, it does seem to have moved beyond what fundamentals suggest. Fundamentals should impact more your day-ahead type of price.
Sometimes something like this has a tendency to send the commodity in question in the direction that it's going. And, you know, a story that Brian has brought us so well over the years is the tremendous story that natural gas is in America. And so here they go. They're so smart in the back. They're going to a long-term trend of natural gas. What is the trend here? We have been extracting more and more of it. Is it a higher price trend? Is it a lower price trend? What's the trend in natural gas?
I think it's fair to think of it as a higher trend going forward versus
higher prices going forward.
Yes, versus what we saw, say, over the past 15 years. Because when shale came about, just made it so cheap to get it out of the ground, and it was so abundant. And one big change that has happened over the past few years, and spoiler alert, it's not just data centers, it's LNG exports out of the U.S.
Replacing Russia. That's a big part of what we're doing now. That's been, are LNG exports in danger from this cold? Or are they going to be able to fill those ships and they'll be on their way?
For a few days, it's very likely that the facilities that normally export the gas, they're going to look at the price on the ground and just resell it to the grid. So yes, for a few days, the loadings out of the U.S. are going to drop, but it's not a permanent drop because the prices internationally are still very healthy.
Talk quickly. We've been in Europe for 4 years, told the story, and thank you, Steve. How bad of a situation is Europe in right now? Because inventories are starting to deplete quickly.
Inventories are very low in Europe, but what Europe is sort of counting on at the moment is liquefied natural gas, LNG coming from the U.S. primarily, but also from Qatar. And I think the main reason why, well, there are really two reasons why Europe can count on it right now. The first one is that Asia hasn't been really competing for that LNG for the past year. So that means that Europe can get access to it relatively cheaply. The second reason, and this is more of a long-term trend here, is that global LNG supply is growing like crazy. In fact, 2025...
Are the Saudis in it? They were years ago. They were going to be in the LNG business.
Qatari.
But the Saudis were going to be in it.
Yeah, they were back and forth. You're absolutely right. They made an investment and then they pulled back, and now they have invested in existing terminals. So the Saudis are not building new terminals. The U.S. is, and yes, Brian, Qatar is as well.
Wait, why is Asia not buying LNG?
So you've had, if you look at last year, you've had a lot of weakness in China demand. I think mainly two drivers. One is how much renewable generation those guys are building. Okay. And this is replacing thermal generation. The second factor is industrial demand for natural gas is lower because domestic consumption in China has been weak.
What about the Siberian pipeline? Is that providing a lot of gas to China?
So they have one Siberia pipeline on, and that's fully ramped up. That is providing a lot of gas for China.
I reported that story when it first came out in 1996. I was in Russia. I traveled with President Yeltsin to China.
You rode a bear across the Urals.
An Ilyushin 96.
Went for a swim in Lake Baikal.
To talk about this pipeline that was finally built.
But there you go. Now they're talking about the second
pipeline.
And the deal is not done yet. Let's see how long that takes.
We'll get you back on the network to talk, because I want to talk about this possible Alaska LNG pipeline. But that's for a different segment. Samantha Dart, thank you. Have a great day.